Welcome to Searching Smarter with Selby Jennings, the podcast for hiring managers and professionals navigating the job market within financial sciences and services. Whether you're searching for top talent to grow your team or considering your own career move, this podcast will help you do so with confidence. I'm your host, Jesse Scaff, Global Client Director for Faden International's Financial Sciences and Services brand, Selby Jennings.
Today I'm recording from London, and my guest is Matt Nicholson. Matt's been with the business for 16 years and has done everything from entry-level consultant, just like myself, to launching businesses and teams in risk management and overseeing investment management and quants and tech. So naturally, the conversation is going to be about the European financial services markets. But not only the financial services markets of London and Greater Europe, we're going to talk about the activity that we've seen in the Middle East and Dubai and the growth areas there.
We're 4 times up on placements made in the region in this year alone.
We'll also talk about the partial removal of the bonus cap, what that means for a potential talent migration, and where we've seen that activity already in the buy side as well as the sell side.
Not every institution, financial services or banking institution, has come out and said they're going to take the cap away, which creates a disparity in the market of some banks having it and some banks not.
And generally, we're going to summarize what 2024 financial services look like in Europe and what Matt's expectations are and what we're hopeful for moving into next year. So this one's for the European audience, and we hope you find this one useful. Stay tuned. Matt, good to see you. Thanks for being on. I want to talk to you about your view on the European financial services markets. For starters, give me a view on your view on the 2024 financial services markets in Europe. If you want to get specific to location, we can. If we will get specific to industry, we can. But let's start with what you think the review is.
2024 has been an interesting one. I think it's been a bit of a story of definitely a talent shortage in certain pockets of the market, but ultimately it's been a similar story to what we had in 2023. It's been pretty quiet from a banking perspective. There hasn't been the same degree of appetite there was 18 months, 2 years ago, and that continues to have been a trend. Yes, there's been some interest around kind of the digital asset side, so the kind of crypto element or the commodities market, because there's been some volatility there and some interest in that part. But ultimately, from a banking perspective, it's been pretty much the same, and that's across a pan-European market. We've seen some positive fluctuations in London in recent times. And I think now we're interested to see with this bonus cycle, what it's going to entail around that talent migration across the market from a banking perspective. If we flip that over to the buy side world and we look at the hedge fund market in particular, it's been continual buoyancy and just a carving into what is the best talent out there. And the market moves have been interesting. There's been moves in all the major players. And as AUMs continue to grow across some of the bigger names, but also some of the smaller names, that catching up performance has been good. And that is not showing any signs of slowing down. And it's been an area in the market which I think sell-side institutions and banking institutions and big names on the street have been watching and just ultimately losing talent too. And I don't think it's necessarily been driven by comp vehicle that's on offer at a hedge fund market, but I think a lot of it is down to the interest of the work they're doing, the progression of where those institutions are going to, and the story that they're selling now of where the financial market has moved to in the past couple of years. And do I think volatility will slow down? And I think with all the political upheaval that has been happening across the market in the past few years, I expect that to continue, and I'd expect it to be an interesting next 12 months to see what they do in regards to all the profits and interest that they've been making in the market as well. So yeah.
Have you found, before I give you my answer, what I think, have you found that the talent bar on the hedge fund asset management buy side space, have you found that the talent bar has increased in the last 12 to 18 months?
I think in the past 12 months, 100%. I think that it's getting steeper and steeper in terms of what hedge funds are looking for and what they require for an individual to have. And that's not just on the technical hard skills, but also on the soft skills element, which that commercial nature, that looking into newer markets and newer ways and newer angles to ultimately generate revenue, generate capital for the business. And I think that from a recruitment perspective naturally makes it more challenging, but ultimately I think it's not going to go anywhere. And I think the evolution of the recruiter now versus what it was 5-10 years ago is very different. I think you have to be much more engaged with, as I mentioned previously, the market moves in the market, the technical aspects that are required, but also have a real partnership with the businesses that we operate with to be able to understand what they are looking for, not just from a quantitative technical perspective, but again, and be able to challenge and test those soft skills ourselves before we get within that screening process.
That's a really good point, and I agree entirely. And something that we're trying to do as a business, this refers to, I guess, both our candidates and our clients, is, to your point, just not just the technical bar is raised, but in our vetting conversations with these candidates, how can we do more than summarize the resume, right, on behalf of the client, right? Because if they're a math Olympiad or the world's best programmer, that's going to be on a resume, right? But what our job is meant to be, as executive recruiters and experts in our space, is summarize the candidate's experience in addition, right? Kind of reading between the lines. We're getting a lot of those requests from our clients. And, I think for the candidate side listening to this, when we're asking those types of questions, right, we don't want to just be, having a 2-minute conversation. Are you interested in this role? It does this, it pays this. Great, let me submit your CV, right? What we want to be doing is really getting to know what they've accomplished in their life and in their career, what interests them, and how the candidate themselves actually communicates that to us so that we can make the client, abundantly aware and explain why we think the candidate has become a good candidate for the role, rather than just kind of summarizing a CV and attaching the document in our submission.
100%. It's a differentiator between a candidate that has a great chat from a quantitative space, great Sharpe ratio, whatever it looks like, that's on their resume, and what's going to make them come across as different. And I think, look, we as a business are leaning heavily into AI, as a lot of other businesses and a lot of other recruitment practices are. Understanding the value that an individual can add to a business and how they can bring a change in their commercial scope is very difficult with the current AI tools to pick up, and that which is ultimately what comes from a resume. And that's what our recruiters do, and that's what they lean into. We as a business, and I was doing some coaching work with a senior PM of a large multi-strat fund the other day about how they can approach a talent interview to make them stand out versus the competition, knowing that they even knew the competition that they're up against, because it was such a small niche in the market that they were going for this role for. And a lot of it was down to, how are you adding growth to a business? How are you adding leadership qualities to a business? And how are you making an organization better, and not just from a financial perspective, but from a number of different avenues and educational points. And that is something which maybe within the financial services world wasn't as important 5-6 years ago. It was more like, what's your P&L? How are you going to make my company make more money? But
sure,
now it's actually a lot more than that. I think that kind of employee value proposition is a huge part in terms of what some of the fund side needs to add to that as well.
Most definitely. And one more point on the candidates on the buy side, and I want to do a little pivot, but what are the roles that you and your team saw in 2024? Where was most of the activity for candidates? Was there a difference in 2020 from 2023? Or was it kind of, as far as the talent pool is concerned and the types of roles that we were hiring for in London and across Europe, was there some consistency for the last couple of years?
It was very much the same of a leaning into technical disciplines that people have. The quantitative market, as I mentioned previously in the hedge fund space, was as hot as it was in 2023. The technology world, we had a dip naturally. A lot of the bulge bracket big tech firms let go of a lot of talent, but I don't think that the top talent was ever being let go of those businesses and its ultimacy. And that's what companies in the financial services market want, and they still want it. They want people who can not just develop in C++, Java, the traditional coding languages, but also in other areas which hasn't been as prevalent as previously before. So those technical aspects in the technical market have definitely been there. We've also seen quite a heavy drive into functions like corporate functions, corporate support functions like risk still. I mean, naturally in volatile markets, you want your risk profile managed properly, but also compliance. There's been a heavy stress on regulation with all the challenges that come from, obviously, naturally, banks don't want to get fined, right? They want to make sure that the compliance procedures are done properly, and the regulation that's been increasing. Compliance professionals are in demand, and I think it's those compliance professionals that are being required more on the buy side, but also in the crypto world. That's an area which, after that crypto winter, has come back really strong in the last few years. We've seen it, especially in the UK market, but also in the Paris market, the Dutch market. And the regulations, that industry has been huge as well. So that another demand for another part of the financial landscape, which is demand compliance professional, which has been a real area that has been prevalent. I think also internal audit. Is it the sexiest market? Is it the sexiest area in the world?
It was
Probably
huge
not,
in the US for us this year.
It's been massive, and that's one that I think it's been a real challenge for a lot of institutions to hire into, because there hasn't typically been that much fluidity in that market of candidates moving. And there's actually, from a technical aspect, so IT, internal audit from an IT perspective or securities perspective, or from a more technical landscape, that talent pool hasn't really even been developed that well yet. So we've found a lot of even though investment banks have been quieter than maybe 2 years ago, that's been an area that's been really prevalent. And from a comp perspective, it's also increasing dramatically from what we've seen in previous years.
I think this is a good moment for you and I to both plug that financial operations is an area that we're building out here at Selby Jennings to support on a global scale, as well as our large thematics or legal and compliance function, as well as insurance, right? The non-revenue generating roles, I guess, traditionally in finance, whether it's through desk quants or sales and trading. But these are all areas that we're increasing our footprint to be able to support all clients of all ranges, right? Buy side, sell side, insurance, brokers, and beyond. So not a ton of differentiation in the markets as far as the skill sets are concerned, right? We're seeing a lot of the same types of skill sets and roles being placed, and like you say, that bar for talent on the buy side has increased. One area I think where we do a little bit more in Europe than we do in the US is sales and trading. And just want to ask you a little bit more about the sales and trading market here in London and broader Europe. What have you seen recently? What have you seen, in 2024? And what kind of activity has it been?
I think when there is obviously a challenging economic landscape that we've been in, financial institutions will look and delve in, or want to delve into newer markets, different markets, where they can generate revenue. And you need good sales individuals, you need good business development individuals that can do that. And we've seen a real appetite in probably more recent times of looking for individuals who can expose that parts of the markets, emerging markets or currency markets where, there is volatility and there's opportunities of money to be made. And that's something which has been a real positive area for us. And I think especially in the commodity, I mentioned earlier, the commodities market this year, across all the institutions we work in, the hedge funds have 100% tapped into that. And some of the pods they've been setting up in far-flung destinations all over Europe to be able to capitalize on that has been another area which has been something which we've found fun to work in, challenging at points because the competition for talent is huge. And we've seen a massive drive in comp in that world as well, which look back 3, 4, 5 years ago, commodities probably wasn't as sexy as some of the other markets were, but that now has really come through strong. And I think we don't see that slowing down. We see that continuing as well. So that's probably kind of my viewpoint around the sales and trading world. And I think, look, there is other verticals as well, which I think will pick up next year, which we've always kind of had a hand in around the investment banking space, M&A, right. Borrowing is now the interest rates drop is going to be more prevalent. We're seeing more activity in the private equity space, which has been so quiet in the past couple of years, and that's another exciting area as well for where we're looking forward to seeing a pickup in.
Nice, great. So it sounds like the financial services news is making its way transatlantic, because we're hearing the same thing. In fact, I just read an article this morning about how both David Solomon from Goldman Sachs and Ted Pick from Morgan Stanley are both expecting M&A activity to pick up on a global scale, which lends itself to every other topic that we just discussed, right? Revenue, which leads to private equity competition, which leads to more IPOs and all that. And where there's smoke, there's fire, at least for us, right? So once those M&A or advisory or just general investment banking activities are starting to increase, and the revenues are increasing, generally that means, the support functions are going to be active as well. So across the board for Selby Jennings globally, we can hold a little bit of optimism still.
Yeah. We've obviously had some relative, which is unique to the UK since we had Brexit, and it's probably been stalled for a while, banking bonus cap. And
yes,
that's been a real hold back on the opportunities to make, the large sums of money that the US bankers make on total comp perspective.
Mm-hmm. This is a great point. Yeah, go on, please.
And now this shifting, and look, US banks led the way. Morgan Stanley, Goldman's, and JP all came out and were very, very honest about that. We're going to get rid of it here, and that's gone. And Barclays was the first European bank to do it. Deutsche and an EU headquartered bank has come out and saying they're going to find a workaround for the bonus cap in the UK. It'll be interesting to see what the migration of talent is like across other European bankers who, and typically pre-Brexit, you went to London's like second biggest financial hub in the world right after New York. Like people move here, people want to be here. There's a lot of opportunity. Even post-Brexit, we haven't seen the exodus we thought we were going to see to Paris, to Frankfurt, to Amsterdam. That just hasn't happened to the quantum that it was posted that it would. So which is good, right?
It's a good thing, of course.
UK banking recruiter, and now the bonus cap has been lifted. I'm interested to see if that migration this way really picks up, especially with, obviously in the UK, the budget today it wasn't great news for high earners, but it wasn't as dramatic as what we thought it was going to be. I think from look at the Paris market, right? Like the tax there is enormous for high earners. And I think that was what we've seen after Brexit as being the place where the migration of talent from the UK banking world, financial services world was going to go. And that hasn't transpired. And similar to Frankfurt, they didn't have the infrastructure to bring in as much of the banking populace of Europe into it. And it's not as an attractive location to be located in. It's quite local. It's language barrier. Again, there's a challenge. And Amsterdam, again, doesn't have the infrastructure. So the UK has kept it. And then the shift of just controversial, right? The reason why the banking bonus cap came in from the EU was because of the mistakes that the financial services world made in 2008. It's now 15, 16 years down the road, and we're lifting it. Is like, have we learned? Who knows? But from a talent perspective and a talent migration perspective, that's going to be a real interesting one.
Yeah. So do you think that's going to create more attrition? Because, certain firms have removed the bonus cap, and there may be fee earners who can go make a higher bonus. Or do you think it's going to increase retention, therefore lowering attrition, and therefore would probably affect us in having to go out and generate a bunch of new business on our own because the attrition may not be there? So I guess from a talent, like you say, the talent migration perspective, and from the lens of an agency like us, do you think it's going to more so affect attrition or retention? Or do you have any hopes on it?
Yeah, I'm going to answer that question in two ways. Not every institution, financial services or banking institution, has come out and said they're going to take the cap away, which creates a disparity in the market of some banks having it and some banks not. I think it would be an interesting proposition if there's a half and half split, because if you work for Bank A and they do have a cap, and your earnings and you're a high performer and your earnings are limited in terms of what you can make at Bank B, where they don't have a cap and your earnings could be great, like you will then see attrition between those two banks, and then you'll start to see a flow of talent move around. I think for those banks that do obviously release the cap, they're probably going to retain staff. Well, of course they are. Like if you think your earning power is going to be greater, then there's probably going to be a chance that you're probably not going to be as open to moving in the market. It depends on what and on the performance of certain desks are, and of naturally in what certain parts of different institutions doing better than others will probably still attribute to some of the retention attrition that goes on. But that could be an interesting switch up if that doesn't shift or change, if all the banks don't remove the cap.
Most definitely. And I guess for anyone unfamiliar, is there kind of like a one-line summary that you would use to define the banking bonus cap? And will that pertain to all roles that these institutions have applied it to, or is that just revenue generators?
It's really just revenue generators. And the whole cap was X amount of your base is the maximum you could make. And then now that's going to shift and change to be uncapped. I think there will be still some limitations and some levers that will be buttons that will be pressed to stop it being dramatic. But I don't know. I'm not sure. It's all kind of how up to the institution themselves about what they do. And I think that comes into play next bonus round. So it's almost a bit of a wait and see. Maybe wait for our bonus report, Jesse, and then we can talk about it in a bit more detail there when it comes out.
Not a good plug.
As a plug.
To back and forth from our initial topic of hedge fund and tie that into this, right? Obviously, hedge funds are known to pay really well, especially on the trading and revenue generating side. I think where you might see, to your point that you've just made here, I think where you might see a lot of attrition at the banks that don't adopt the removal of the cap could be to the buy side if they're not going, to those banks that are offering the bonus cap or are offering no bonus cap. And, who knows, there's probably opportunity for those same revenue generators and those same traders to go to the buy side if they're simply just not pleased with what the results are, even post bonus cap. There's the cycle will continue to exist. The bonus cap removal kind of just like fans the flame a little bit, I think.
I do think so. I think it was obviously it was a government decision to take it away. I think, and the banks have lent into it. And I think that it was a definite opportunity for them to be able to compete on a total comp basis with the hedge fund market, which has ultimately dominated comp discussions in the past few years. So
for sure.
Yeah, I think so. It's probably a big part of that.
Switching out of Europe just for a second, because I know that your coverage and some of the roles that we've supported recently cover this region. Tell me what's going on in the Middle East region, Dubai, and what we're doing and what kind of roles and financial services market is active in that area.
It's been very well publicized. A lot of the multi-strat fund space has opened up offices in the UAE and the Middle Eastern region. I think that has ultimately been driven by the opportunity of capital that is there and the tax benefits that are prevalent for European talent. Like, there's no two ways about it. It's a lot more. Like, you're not paying any tax on your income. So that ultimately has driven a lot of personal decisions for individuals to make that move. And I think when it first started to be seen, it started to happen, we were talking a lot with our client base. It was not about hiring hundreds of new employees into the region. It was more about individual PMs or smaller pods opening up and just having a presence there. Mm-hmm. That rhetoric is definitely changing, and across Dubai, Abu Dhabi, there is a definite appetite to hire and hire big. And those talent pools are from Asia, and it was having to that region, but also from India, and also from the UK. That talent pool has definitely shifted a focus nowadays into wanting to go into the Middle East. And I would say probably on a percentage of applications, but total applications for us, there's probably been a double-digit rise, double-digit uptake in people applying for jobs in the Middle Eastern region, which wasn't the case 5 or 6 years ago. And that's majority across the tech world, the quant world. I think some of the corporate functions are still not really making that transition because they generally have the core central functions in more recognized main financial hubs. But I would definitely say there's been an uptick vastly in the region in terms of interest.
I think we actually, as a business, just placed a quant PM in Dubai for a hedge fund client recently. So that checks out. And again, like you say, it's pretty much revenue generating roles. So
yeah, we're 4 times up on placements made in the region in this year. That's the line. That's 9 months. So we expect that to go. We are now visiting the region more often. There's talk of expansion there from a business perspective. I think 100%. Like, we want to do more there. I think it's a region which has a lot of opportunity, and we're driven by what our candidate base wants and looks for, and that's definitely an area of the world which, there's a lot of interest in.
To close out then, as we're on our way into 2025, I know we touched on it briefly of, do we think it's going to be the same or anything like that, but give me your summary or your prediction, some kind of a take of what you expect the European financial services market to look like?
There's definitely going to be more deal activity, 100%. As inflation drops, interest rates drop, that's definitely going to be a big part of change. And we're going to see more deals happening, bigger deals happening. So there's going to be a lot more in the private equity space. There's going to be a lot more in the acquisition space. So that's interesting. That moves, as we talked about earlier, it moves the market in a good way. I expect the investment banking bulge brackets to come more online with hiring talent. And we're already seeing pockets of that, due to deal activity being one of them. But I think as the world economy improves, yes, there's some outliers, there's some conflicts ongoing, or could enter the stratosphere, which could create some challenges from a volatility perspective. But I expect talent to start migrating back into the banking world, which is a positive thing for the street.
Most definitely.
And look, I'd see they're going to be still a heavy influence of hiring into quantitative and technical disciplines. It is just becoming more of a skill set that has to be required in any shape or form within any financial service institution. I mean, I think the generalist is just not as appealing anymore.
Thanks for that. Great to see you. Great to talk to you. And we are looking forward to, like you say, the same thing in the US, but I think on a global scale, having the financial services markets back and more volatile and more active, and we'll see where it takes us. So thanks for being here today, Matt.
Thanks, Jesse.
That's all for today's episode of Searching Smarter. If you found this conversation valuable, be sure to subscribe so you don't miss an episode. Until next time, keep searching smarter.